Hey everyone, and welcome back to the channel. Today, we're diving deep into a fascinating topic that has been gaining a lot of buzz in the trading world, the Marsi Indicator. If you've ever felt like you're just a step behind the market's big moves, or if you're looking for a tool that might help you spot trend reversals before they happen, then you're going to want to stick around. We're going to break down what Marsi is, how it works, and how you might be able to incorporate it into your own trading strategy. So, what exactly is this Marsi indicator? Marsi stands for Money Flow and Relative Strength Index. It's a hybrid indicator, which means it combines the principles of two very popular and powerful indicators, the Money Flow Index, or MFI, and the Relative Strength Index, or RSI. By merging these two, Marsi aims to give traders a more comprehensive view of the market's momentum and the pressure of buying and selling. Think of it as getting to expert opinions rolled into one cohesive signal. Let's quickly recap what each of these components does on its own. The Relative Strength Index, the good old RSI, a momentum oscillator that measures the speed and change of price movements. It oscillates between 0 and 100. Traditionally, an RSI above 70 is considered overbought, suggesting a potential pullback, while an RSI below 30 is considered oversold, hinting at a possible bounce. It's fantastic for gauging momentum, but it only looks at price action. Now, let's bring in the Money Flow Index, the MFI. The MFI is often called the volume-weighted RSI. It also oscillates between 0 and 100 and uses similar overbought and oversold levels. But here's the key difference. The MFI incorporates trading volume into its calculation. This means it doesn't just look at how fast the price is changing. It looks at how much money is actually flowing into or out of an asset. High volume on up days suggests strong buying pressure, while high volume on down days suggests strong selling pressure. It adds a layer of confirmation that price alone can provide. So, the genius of the Marsi indicator is that it combines the price momentum analysis of the RSI with the volume-based analysis of the MFI. It essentially asks two questions at once. Is the price movement strong? And is there significant money backing this move? When both answers are a resounding yes, you get a much more robust signal. This fusion helps to filter out false signals that one indicator might give on its own. For example, you might see the price of a stock shoot up, and the RSI might scream overbought. But if the MFI shows that the volume behind that move is weak, it could be a sign that the rally doesn't have real conviction and might fizzle out. MARSI helps you see this combined picture more clearly. Alright. So, how do we actually read and interpret the Marsi indicator? It typically appears on your chart as a single line, just like the RSI or MFI, oscillating between 0 and 100. The interpretation is also quite similar. We look for overbought and oversold conditions. Just like with its parent indicators, a Marsi reading above 70 or 80 can suggest an overbought market, ripe for a potential reversal to the downside. Conversely, a reading below 30 or 20 can signal an oversold market, where buying pressure might soon step in and push prices higher. But the real power of Marsi, and where it truly shines, is in identifying divergences. A divergence occurs when the price of an asset is moving in one direction, but the indicator is moving in the opposite direction. This discrepancy can be a powerful early warning sign that the current trend is losing steam and a reversal could be on the horizon. Let's talk about the two main types of divergence. First, we have the bearish divergence. This happens when the price of an asset makes a new high, but the Marsi indicator fails to make a new high and instead forms a lower high. Picture this: the stock price is climbing, hitting a new peak, and everything looks bullish. But underneath the surface, the Marsi indicator is telling you that the momentum and the money flow behind this new high are weaker than they were for the previous high. This is a red flag. It suggests that the buying power is drying up, and the trend might be about to reverse downwards. Spotting a bearish divergence can give you an opportunity to consider taking profits or tightening your stop loss. On the flip side, we have the bullish divergence. This is the exact opposite and can be a great signal for potential buying opportunities. A bullish divergence occurs when the price of an asset makes a new low, but the Marsi indicator forms a higher low. Imagine a stock is in a downtrend, hitting lower and lower prices. It looks bleak. But the Marsi indicator is showing that with each new price low, the downward momentum and selling pressure are actually decreasing. This suggests that the sellers are getting exhausted, and the bulls might be getting ready to take control. This can be an early signal that the bottom is near and a trend reversal to the upside is possible. Now, it's crucial to remember that no indicator is a magic crystal ball. The Marsi indicator is a tool for analysis, not a guarantee of future performance. It's most effective when used as part of a comprehensive trading plan. You should never rely on a single indicator to make your trading decisions. It's always best to use Marsi in conjunction with other forms of analysis. For example, you could use it with classic chart patterns, support and resistance levels, moving averages, or candlestick analysis. Let's walk through a hypothetical example. Let's say you're watching a stock that's been in a strong uptrend. The price makes a new all-time high. You look at your Marsi indicator, and you notice a clear bearish divergence. The indicator is making a lower high. This is your first alert. Now, you don't just blindly short the stock. Instead, you look for further confirmation. You might wait for the price to break below a key short-term moving average, or for a bearish candlestick pattern like an evening star to form. When you get this additional confirmation, your trade has a much higher probability of success. The Marsi divergence was the early warning, and the other signals confirmed your thesis. The same logic applies to a bullish divergence. If you spot a bullish divergence on a stock that's been falling, you can then look for a break above a resistance level or a bullish engulfing candle to confirm that the buyers are indeed stepping in. By layering your signals, you filter out a lot of the noise and increase your confidence in each trade. So, how do you get the Marsi indicator on your charts? It's not always a default indicator on every trading platform, but because it's based on the well-known RSI and MFI, you can often find custom versions of it available for popular platforms like TradingView, MetaTrader, or Thinkorswim. A quick search in their community script libraries will usually yield several options. When you add it to your chart, you can typically customize the settings, like the period length for the RSI and MFI components. The standard is usually a 14-period setting for both, but feel free to experiment to see what works best for the asset and time frame you're trading. In conclusion, the Marsi indicator, a powerful tool that combines the strengths of both momentum and volume analysis. By merging the RSI and MFI, it provides a more nuanced and robust view of market dynamics, helping traders to filter out false signals and, most importantly, spot potential trend reversals early through the identification of divergences. Remember, it's a piece of the puzzle, not the whole picture. Use it wisely, combine it with other analysis techniques, and always practice sound risk management. I hope this breakdown of the Marsi indicator was helpful for you. It's a fantastic concept that can really add depth to your technical analysis. If you found value in this video, please give it a thumbs up. It really helps the channel out. And if you haven't already, make sure to hit that subscribe button and ring the notification bell so you don't miss any of our future content. Thanks so much for watching, and I'll see you in the next video.